Dividends. Who doesn't like getting an extra bit of cash for holding companies you believe in, and hopefully one day even building a large enough portfolio to which you can potentially live off dividend payments? But before you can retire or even get another income stream from dividends, you need to figure out what positions you're going to invest your money into and hopefully bring the best bang for your buck. Here are 4 dividend paying stocks and 1 ETF at the end that you can potentially add to your ASX portfolio. Whether you're just beginning your journey or you are a seasoned investor, it's always great to look at new potential positions to add to your portfolio and to broaden your horizon. The stock I wanted to highlight is BHP Group. BHP Group Limited, now trading as BHP, is a diversified resource company which extracts, processes, and market metals, minerals, coal, iron ore, and petroleum products to global markets. BHP is a very popular Australian stock, with it being the largest company on the ASX with a $185 billion market cap. And on top of that, it offers an amazing dividend with a 12.14% annual yield, which if you're looking to up your average dividend yield, look no further. The stock has experienced a rough past 3 months, being down 15% as the overall market saw struggles. But with that, the stock is only down 4% in the last year and has been recovering lately, up 6% in the last week. With high iron ore prices and the profitability it has posted, removing the dual listing structure, BHP's ability for higher capital returns is actually very strong this year. And if you are looking for a strong dividend company to add to your portfolio, you should definitely look into adding BHP to your watch list or your ASX dividend growth portfolio. The next company I wanted to highlight was actually here in the retail industry. It is Wesfarmers Limited. Wesfarmers Limited is a name you might not know, but once I start naming some of their businesses, you will be a customer at least a few. Some of them include Bunnings, Kmart, Target, Officeworks, Priceline, and just Coles. From its origins in 1914 as a Western Australian farmers cooperative, Wesfarmers has grown into one of Australia's largest listed companies. Headquarters in Western Australia, its diversified business operations cover home improvements, outdoor living, apparel and general merchandise, office supplies, health and beauty and well-being, and a range more. Wesfarmers is one of Australia's largest employers and has a shareholder base of approximately 484,000. Wesfarmers offers a dividend yield of 3.81%, which is very respectable, and like majority of stocks, has had quite the year, down 16% in the last year, but has been on the rise back with a 9% increase in the last 3 months. And when looking at the past 3 years, you can see just how the stock recovered well from the pandemic, and that it is definitely one to add to the watch list for potential dividend growth with the retail giant diversified into so many businesses. The next stock I wanted to shed some light on is actually in the insurance sector, and it is Suncorp. The insurance giant offers a dividend yield of 3.68%, which is very respectable. The stock has had a rough year, being down 13%. You can see in how the up and down the stock has been. The stock has still not recovered from its pre-pandemic highs and has been staying very steady for the last 3 months. ANZ recently announced its planned acquisition for Suncorp Bank for $4.9 billion. Suncorp's profits fell 34% year on year in the financial year of 2022, weighed down by an abundance of hazardous weather events. So there is a lot going on with the company now, but is still one to keep on your watch list and potential eye out in the insurance sector for dividend stocks. The last of the 4 stocks I wanted to highlight today was actually in the retail sector as well, and it is Premier Investments Limited. This is an Australian public company limited by shares It has been listed on the Australian Security Exchange since the 15th of December 1987, and the company was established as an investment vehicle to maximize growth in capital returns to shareholders through the acquisitions of controlling or strategic shareholding in Australia's premier companies with a particular focus on retail, importing and distribution. Some of their big well-known businesses include Smiggle, Peter Alexander and Just Jeans, just to name a few. And they are a big presence in the retail industry, as they have recovered well post-pandemic, being up 41% in the last 3 years. Despite a 21% drop-off in the last year, the stock is a very attractive dividend buy with its 4.25% dividend yield. But again, the company seems to be going through a rough patch, so make sure you do your research before buying in and choosing well on what you invest in. And finally, the last position I wanted to highlight is actually an ETF from Vanguard called VHY. This is Vanguard's Australian Shares High Yield ETF. The ETF provides low-cost exposure to companies listed in the Australian Securities Exchange, the ASX, and this offers a 3.33% dividend yield. The securities diversification is achieved by restricting the proportion invested in any one industry to 40% of the total ETF and 10% for any company. Australian real estate investment trusts are excluded from the index. The ETF has been through its ups and downs, but has stayed at roughly $65 a share for the year now. When people speak on dividend investing, it's very rare that ETFs get brought up, as majority of investors discuss different stock positions, but actually investing in high yield ETFs can offer you as an investor potentially more diversity and just as high dividend payouts. Hopefully this video has helped showcase some ASX dividend stocks and ETFs that you could add to your own watch list or even potential portfolio if you are looking to grow your dividends and even potentially a second income down the line. Leave your thoughts on the positions and if you own any or are invested into any of them, and your thoughts on dividend investing. Subscribe for more weekly business and finance content.
The things you do.